If you're a business owner, you've likely seen the Facebook or other ads that claim to have this one simple trick or a secret the government doesn't want you to know about that'll save you thousands on taxes. Spoiler alert, it's not a trick and it's not a secret. I would guarantee almost every single one of those ads is referring to the S corporation, or rather changing your company to an S corporation. What they don't tell you is that it's not for everyone. And I'm here to tell you, in as much of a non-sensationalized way as I can muster, that it could actually save you a significant amount of money. I'm going to talk briefly about what an S Corp is, along with 3 important tips to remember. An S Corp is not technically a standalone entity. It's a tax election that's applied to a pre-existing entity, but it can't be applied to a sole proprietorship. You first have to have either an LLC, a partnership, or a C corporation in place, and then you file a form with the IRS to change how the business profits are taxed. It's called an S corporation because you're electing to be taxed according to subchapter S of the Internal Revenue Code. So when someone says they have an S corp, usually what they mean is that they have an LLC that has elected S corp status. It's an LLC with that S corp tax treatment layered on top of it. So what does an S corp actually mean to you? Potentially tens of thousands of dollars in tax savings. It's actually real. It gets sensationalized and often misrepresented, but this is something I help dozens of clients with every year when I see that they're a good fit. Now, it can be done prematurely. I have new clients come to me and say, my friend or my brother-in-law or even my CPA said I should set up as an S corp. So I did, and now I'm not sure what to do. And then we have to evaluate if that move really made sense, because there are additional costs that come with operating as an S corp. But it doesn't take long before the benefits of the S corp far outweigh the additional financial costs. So how does it save you money? If you've already filed taxes as a self-employed small business owner, you may have noticed that in addition to your regular income tax, the IRS takes another huge bite out of your business profits with what's called self-employment tax. This is a tax that's approximately 15% of your business profits. It's the self-employed version of the Social Security and Medicare taxes that you'd normally see taken out of your W-2 paycheck. Only instead of being 7.65% of your earnings, it's twice that, because you're also paying the employer portion that your employer used to pay in addition to the employee portion. Now, when you elect S corp status, your profits are no longer subject to self-employment tax. Let me say that again. As an S corp, the profit is not subject to self-employment tax. That's huge. So if you have a profit of $100,000 this year and file as an S corp, that's about $15,000 you save on self-employment tax. If you profited $150,000, that's over $22,000 you save. Now, earnings above a certain limit are not subject to Social Security tax. This means at a certain point, there aren't any additional savings for the Social Security, but there is no earnings limit for Medicare tax. So as your profits increase, the S corp savings will continue to increase, but at a lower rate after you exceed the Social Security cap, which will be around $175,000 for 2025, and it increases every year. Now I'm going to go through 3 important tips to remember for operating as an S corp. Tip number 1, perhaps the most important thing to remember, is the requirement to pay yourself a reasonable compensation. This means that you actually put yourself on payroll and you get a W-2 from your company. So the S corp isn't totally a free ride, because the IRS will get some payroll tax, the Social Security and Medicare, through your W-2 salary. But everything left over after that is not subject to self-employment tax. So how do you set up with payroll? I recommend using a payroll service like Gusto. I don't personally offer payroll services, and a lot of CPAs who say that they do are actually just using a service like Gusto anyway. Gusto walks you through the setup and takes care of the quarterly payroll filings and payments. And you can use the link below to get a discount off your first bill. So how much do you pay yourself? The IRS doesn't give specifics, but rather general guidelines. It used to be more common for CPAs to say pay yourself a certain percentage, like 60% of your profits as a salary or 50%, but it really depends on what's common in your industry. If you want to be aggressive, you could ask yourself, what's the least I could pay someone else to do my job? Is it minimum wage? Because the less you pay yourself often means more tax savings. The reason for this is because the profit left over after you pay yourself is the amount that's not subject to self-employment tax. So if your earnings before paying yourself is $100,000, let's say, and you take a W-2 salary of $30,000, that leaves you a profit of $70,000. The 15% self-employment tax savings on that $70,000 is over $10,000. So the higher the profit, the higher the savings. You just don't want your salary to be so low that the IRS notices and comes and says that you're paying yourself way too little for the work you're doing, and then in theory they can charge you for the payroll taxes you would have been paying had you been paying yourself a more reasonable salary. But S corps are actually the least audited entity out there, so don't use the idea that you might get audited as an excuse not to go ahead and do that S corp. Tip number 2, bookkeeping is always important, but it becomes even more important when you become an S corporation, because S corps have to file a separate tax return in addition to the owner's personal tax return, and when your sales exceed $250,000, you're required to include a balance sheet on the S corp tax return. A balance sheet is simply where you list your assets, liabilities, and equity, and if you don't have a clean set of books, it can be difficult to put that together. And even if you're not yet at that threshold, doing it from the beginning makes it much easier to do down the road. Tip number 3, establish an accountable plan. Now that sounds intimidating, but all it means is to have a process for reimbursing yourself. S corps aren't technically eligible for deductions like the mileage deduction or the home office deduction, but you can have the S corp reimburse you for the equivalent of what those deductions would have been for you as a sole proprietor. It's just a simple transfer from your business bank account to your personal account. The reimbursement is a deduction on the business books and non-taxable to you individually. And I have an example of a simple accountable plan you can use and keep in your records in the link to my download below. The additional costs you incur when you have an S corp include the cost of the tax return, the payroll service, and miscellaneous maintenance costs. It could be an additional $1,500 to $2,500, so you just want to make sure that the savings you're realizing exceed those costs. There's no exact answer, but I tell people they should at least consider the S corp when their annual profits exceed the $30,000 to $40,000 range. So if that's where you are and you have questions or think you might be a good fit, feel free to reach out to me. I've talked to so many people who historically haven't moved forward with an S corp just because they feel intimidated, but it's really not that bad, especially if you have someone help you along the way. It's not that complicated, but I do want people to have a good understanding of what's entailed, which is why I've created a free download where I've listed everything I think people should know about S corps. In addition to what I've already talked about here, I review proportional distributions, state tax differences, tax basis, how to pay your kids from your S corp, how to deduct health insurance, all from the S corp standpoint. I also dive deeper into S corps and other entities in my Reseller Tax Academy course, which opens again in January, and you can use the waitlist link below to be notified. Subscribe for more videos on how to get your taxes and accounting on track in your reselling business, and check out @NotYourDadCPA for more tips and behind the scenes. I want to help you optimize your tax situation so you can ditch the anxiety and focus on building your business profitably.